What's up, everyone? My name is Donnie Nguyen from Wolves of Investing. Welcome to my show, One Stock at a Time, where I buy one share of stock at a time on Robinhood, where trades are commission free. Today's episode is a concept episode, so I'm not going to be buying any stocks today. Today I'm going to be going over the 5 reasons why I only buy one share of stock at a time on Robinhood. If you haven't already, make sure to smash the like button and subscribe to the channel. But before we get started, as always, I've got to give you guys my quick disclaimer. I am not a financial advisor. This is not financial advice. Anything I discuss here is my own opinion and should only be used for informational purposes. What's up, everyone? I'm back, ready to talk about the 5 reasons why I only buy one stock at a time on Robinhood. If you're thinking about signing up for Robinhood, sign up with my referral link in the video description, and both you and I will receive one free share of stock from Robinhood. And if you want to learn more about investing, be sure to check out my site, wolvesofinvesting.com, and download my free ebook. My site's link is also in the video description. So without further ado, let's get into the 5 reasons. Reason number 5, doesn't require a lot of capital. This strategy is really great if you don't have a lot of money to invest. Let's say every month after you get your paycheck, you pay off all your bills, you spend a little money for fun, and you're putting money into your emergency fund. You have a little money left over that you want to invest in stocks. Maybe it's only $100 a month, maybe it's only $50 a month. Now if you are in a regular brokerage that charges $5 commission and you bought $50 worth of stocks, you'd be down 10% right from the start. Now that is ridiculous. I don't like paying more than 1% commission for buying any stock. In the case where there's a $5 commission, I'm going to force myself to buy a minimum of $500 so that I don't get eaten alive by trading fees. But with Robinhood, since there aren't any commissions, I can invest a little bit at a time and not have to worry about trading fees chipping away at my account. So that is reason number 5. Reason number 4. Encourages long-term investing. Now, if you've read my ebook, you know that I'm a big fan of long-term investing. Not only did I learn from Warren Buffett, Peter Lynch, and other legendary long-term investors, I also learned through my own experience doing 3 years of swing trading and losing to the S&P 500 over those 3 years, that long-term investing is the way to go. So with buying one share of stock at a time, I can pick a basket of stocks that I want to own, really great companies at reasonable prices, which is what Warren Buffett does. And I can buy them slowly over the course of many years, as long as I still think it's a great company at a reasonable price. I can pick up one share at a time and build up a money-making portfolio. So that is reason number 4. On to reason number 3. It frees up my cash for other buying opportunities. By purchasing one share of stock at a time, I'm able to free up my cash in case another opportunity arises. Let's say, for instance, I got a lump sum of money. Let's say I got a tax return of $5,000 and I wanted to invest it in the stock market. Well, I could just dump the entire $5,000 into the market, but then all my money would be tied up. Instead, I could use that $5,000 to buy stocks slowly over a period of time, like a few years. This would allow me to reevaluate the best stock opportunities every month and make more deliberate, well-informed stock purchase decisions. So that is reason number 3. Reason number 2. It reduces the risk of going broke. I discuss the concept of trading small in my ebook. A general rule of thumb is to not risk more than 2% of your portfolio in a single stock purchase. I used to play online poker on the side, and one of the most important concepts that winning poker players master is called bankroll management. In online poker, the general consensus for a no-limit hold'em player is to have at least 50 buy-ins for their bankroll. That means they'd have to lose their buy-in 50 times before finally going broke. Similarly in investing, if you're only putting a maximum of 2% of your portfolio at risk in a single trade, then you'd have to lose 50 times before running out of money. If you're picking great companies at reasonable prices, it would be very hard to go broke if you're trading small by buying one share of stock at a time. So that is reason number 2. And finally, reason number 1, why I only buy one share of stock at a time on Robinhood is that it discourages FOMO, or fear of missing out. A lot of people get into the market at the worst times. This is especially true of beginning investors. Think about the dot-com bubble, the housing bubble, or the Bitcoin bubble. In all those bubbles, there was investor euphoria, and everyone thought that prices would go up forever. So they plowed money into those markets right before the market tanked. But by choosing to invest in stocks slowly over time, we can reduce our risk of making FOMO purchases. So those are the 5 reasons, guys. Let me know what you guys think by leaving me a comment below. Make sure to click like and subscribe. Thank you all for watching, and I will see you next time.